In this presentation, we will record the purchase of raw materials on account, or in other words, the purchase of raw materials not for cash, but increasing the accounts payable within QuickBooks Pro, QuickBooks Desktop. Here we are in our practice problem 2. We currently have the open windows open. You can open the open windows by going to the view dropdown and the open windows list. We're now going to be taking a look at our Excel sheet to consider our next step. We're on tab 1.1, and what we're going to do is we're going to make the items green. Those are going to be the ones that we're going to be recording. We're going to keep all of the journal entries in there from the prior problem and note the differences. Note the differences from the prior problem so you can kind of get an idea of the feel of what are the differences from the prior type of system we used and this type of system we're going to be using. So what we're going to do here is we have the purchase of raw materials on account. If we were just simply to do this with a journal entry, we would debit raw materials inventory, credit the accounts payable. Let's record that out. Straightforward type of transaction. We're going to debit the raw materials inventory, increasing what would be in the inventory from 0 up to 400,000. The other side going to accounts payable equals currently at 45,000. It's going to be going up by the 400,000 to 445. That puts us back in balance. That's the transaction, no effect on the job sheets over here, nothing happening over there. That's all we need to do. Now we're going to have to do that in QuickBooks. However, we have the added step of tracking the inventory. And so we want to make sure to put that step in place. So that's going to be the added step within QuickBooks over and above the journal entry here. Note that obviously if you were to have a system like that, like this, and you wanted to track the inventory, then you would need to be counting the units of inventory you have. QuickBooks will then be doing that for us with the raw materials the way we have it set up this time. So if we go back to QuickBooks, we're going to enter a bill. So we're going to go back up top, enter a bill. Looks very similar to a check, but this is a bill, which means that accounts payable will be going up. We're going to use Home Depot as our vendor. That's going to be our primary vendor we'll be using all the time. The date here is going to be on the 1st. So we're going to say on the first day of the period we will be working with, January 2020. The amount is going to be for that 40,000. We're going to leave the terms as are. We're going to go down. We don't want to use the expenses tab, but the items tab. So we're going to move over to the items tab, and that item is going to be direct materials. Note the quantity is on there at 1,000 again. That's because we set it up. How did it get that number? It got that number from, if we go to the lists up top, the item lists, we set up our materials item here, double clicking on it to be at the cost of 1,000. I don't think I picked the right one. Oh, there it is. Yeah, 1,000. So then if we close this back out, closing this back out, that's going to be the 1,000. So we just need to see how many units we have, or we need the total cost to be 400,000. Therefore, I'm going to put the 400 here, and that'll tie out to the 400,000. This is not going to be assigned to any particular job at this point in time because we're just basically saying we have the inventory, we're storing the inventory, we purchased a lot of inventory here, which we're then going to apply to the job in the next step. So we're going to say we're not going to apply it to the job at this point. I'm going to say save and close. So we'll say save and close and yes and okay. It says it's not in balance, and that's because we're missing a 0 up here. So 400,000. And then I'm going to say save and close. We'll try this again. We're going to say yes. And then let's go to the trial balance. I'm going to go to the reports up top. We're going to go down to the accounting and taxes. We'll take a look at the trial balance. Within the trial balance, we'll change the dates from 01/01/20 to 12/31/20. There we have it. Our new item is here in the inventory assets. So we're tracking the inventory assets here. The other side going to accounts payable. Here's accounts payable. If we double click on those items, then there's going to be our bill. You can see it's a bill by the bill rather than a check. Double clicking on it, and there's our bill. Closing this back out, closing this back out. The other report tracking our inventory. Reports drop down. We go to the inventory. We can go to the inventory valuation summary. And that's going to give us our info. Let's make this as of 12/31/20. And we have the 400 units at the average cost. That's what they're going to be using, weighted average method. It gives us the 400,000. And that should tie out to our trial balance. So that's kind of the new thing we're doing here. Note that obviously, if we go back to Excel, if you're just going to be assigning the inventory out and you don't want to track it, meaning if you're doing a just-in-time tracking, you're purchasing just enough inventory to cover a job and you don't need to use the inventory tracking, that'd be fine. That might make it easier to do. And then you would simply assign out the inventory as you do the job. And you may not then need to track the inventory at all. And you could do it like we did on the prior problem. Just as you buy the inventory, you you record it to the specific job that you will be using. But we just want to note how that inventory tracking can be used if you wanted to use that inventory tracking method within QuickBooks.